So global share markets have fallen over the past 24 hours, with mainly US and European markets seeing declines. Out of the US, they are really focused on unemployment data, which will be released on Friday, and this should give a good indication of how the US economy is tracking, because it has actually been tracking relatively well in terms of employment over the past couple of months. It was also interesting to see some of the apparel companies, the likes of Gap, see their share price fall over the past day, and this was once again because they're talking in the market that their higher input costs are having an effect on their business, and they're really not too sure whether higher fabric costs will be soaked up by consumers. The Kiwi dollar has also been slightly weaker over the past day or two, and is trading early on Friday morning at around 81.30 against the US dollar. Well, global commodity prices have been a pretty hot topic in the media over the past couple of months, and the reason for this is that we've seen their prices rise strongly, and they are also looking pretty good at the moment. It was interesting to note that wheat prices lifted over the past 24 hours on the global market, snapping a couple of days of losing streaks after the announcement from the Russians that they're opening their doors once again to wheat exports. However, one of the credit rating agencies was in the media over the past 24 hours talking about the possibility of a large commodity price fall if government policy out of China in particular really tightens up. Well, prices at the latest global dairy trade auction lifted once again, and on a trade-weighted basis, they were up by around 4.5%. It was interesting to see that skim milk powder prices lifted strongly and whole milk powder prices actually fell just marginally, but the volumes at this latest auction were down quite a bit, so I'm not really paying too much attention to this. However, it is good to see that prices have somewhat stabilised at these very high levels we've been seeing over the past couple of months. So what does this really mean for the payout for next year? Well, here at ASB, we have been forecasting an in-the-hand payout to farmers of around $7 for a few months now. And this is really in line with what Fonterra came out with last week. While we're still at the very early stages of this season, we're really sticking by this forecast of around $7 for farmers in the 2012 season.